Hey everyone, this is Michael Bengiat from Lifetime Investor, and this is the Stock Picks weekly update for March 19, 2022. So as usual, we're going to go into the current market environment. We'll review our current positions, of which we actually have some now, and we'll review the stocks on our ready and watch lists. I do got to just give real briefly the disclaimer. I won't read the whole thing, but I want to say that the content and information in this presentation is provided for educational and informational purposes only, and in no way should be considered investment advice. Okay, so let's take a look. Yesterday was Friday, March 18th. Our overall stock environment is still red, though it's improving, which is a major plus, but we're still not quite there. If we get continued strong action coming up next week, we'll probably move it to yellow. I may not go to green yet. So, but we're still we are seeing improvements, so that's a great sign. Really the best strategy we've still been finding is that you're just selling into short pops. If you can get a 10% move or more, usually it's prudent to at least take some of that, because a lot of times they've been, for the last year, a lot of those just disappeared. Holding for the longer term moves just really didn't work very well. More often than not, you lose your gain, and if you were in any tech stocks, you not only lost all your gain, but if you hung on, you could have been down 50, 60, 70% or more. So we're going to be sticking with that for now, because that seems to be working. We did change our recommended stock exposure up to about 20%. Again, we're always, it's still low, so you're not really jumping in. We should never just jump in. We let the market always prove itself, and it hasn't proven itself yet, except for we've had 4 real powerful days in a row, but there's a lot of signs of that a lot of that was short covering. A lot of the real beaten down tech stocks really just went rocketing back up. I think PayPal went up 27% just last week alone, though it's still down over 60%. So it really didn't make much of a move, a dent in its huge downtrend, but it's a step in the right direction. So one thing I wanted to mention that I know I put this note on a few days, but I always get questions like, why don't we buy all the stocks in the ready list? So sometimes we'll have 5, 6, 7 stocks, and we don't buy them all. And the real reason is that, we may just be in an environment like we've been in, and we really want either very little exposure or just 1 or 2 stocks. And there may be, 4 or 5 that are actually ready to go. So we usually end up buying, 1 or 2. If we were in a very strong market, we might own all of them. We don't like to have more than really 6 stocks at a time, ideally 4 or 5, so we can have nice, good concentrated positions, but really it all depends on market conditions. So again, we may just have 1 or 2 of them or none, but in no way, if we buy one and we don't buy the other ones, it doesn't mean that those are not as good or there's something wrong with them. It just means that we've really been buying them in the order of breakout, or just the breakout setup was a little stronger than the previous one. And sometimes they just come out of the blue. Stocks we don't even see, and all of a sudden the next day, wow, this one just appeared out of nowhere. And it's just a lot of these recent days. There's a lot of volatility, and there's huge moves going on all the time. So a stock that looked terrible a week ago can suddenly look fantastic. So that's why we're all screening to find the best stocks. So anyways, I wanted to answer that question. Again, if we own one in the portfolio and you saw one that looked pretty good and you wanted to buy it, there's nothing wrong with that, as long as you're following the risk levels, putting in stops, and trading in a risk-free manner as possible. Okay, so as I mentioned, we had 4 powerful updates in a row, and the stocks are acting a little better, but we just don't have a lot of merchandise still. I'm going to show you a couple of charts. What's been happening is that a lot of charts have just been shooting straight up the right side and past buy zones. So here's a good example I've been watching Rambus, even though I don't think it's on our list, and it had formed a nice cup base here. Tried to break out, and then all the recent volatility just jammed it down. It actually, if we had bought it anywhere here, you would have been kicked out, because we went down below our 8% sell zone, and then just came rocketing back. So really, and nice volume too on the recovery. But there's really not a low risk place to buy these kinds of stocks. So we're kind of we see the breakouts and we just have to pass, because we're trying to buy into low volatility. Here you can actually see this little cut base here, and then we got really kind of tight in trading here, and even over here. So this was a little buys area right here. Then it kind of went tight again, and then this was another real nice place to have bought, where the volume kind of dipped down, gave us a nice buy when it broke above here, or even above this little area here. That would have been a nice buy. But we're just getting a lot of volatility. I mean, on this down day, it was huge volume. So really just we have to pass those. And here's another one. Been on the watch list, even though it's not on our watch list, been on sort of my secondary list and just shot straight up past the buy zone. We just have to sort of stand aside and wait for other plays. And there's there's many stocks. So you never want to feel like you missed out on something. There's always hundreds more coming in your way in the next weeks and months. So before I go into all the positions, I just want to show this is just the top 40 industry groups, and it's still all filled with cyclicals, energy stocks, mining, chemicals, some buildings, wood, specialty steel, a couple banks. So it's all really pretty defensive and cyclical stocks. There really aren't any traditional growth areas yet showing up in here. So the market's in a transition. We don't know if as growth starts coming back into vogue, they're going to sell all these, which is what's happened for the last year. A lot of rotation was going on. They jump into one. Sometimes the rotation was every day. So one day all the oils went up, and then the next day they sold them all and they piled into something else, semiconductors, and then 2 days later those sold off and something else went up. So that's just a very difficult market, which is why we've been really out of the market for a long time. So we're not seeing anything yet in here, but we monitor this and we try to see if we start seeing more traditional growth sectors and industry groups showing up. And when they do, those will be some of the real strong winners that may come out of those groups. So we're going to be watching those. Though I think we have a couple of tech stocks on our lists, which sort of could be some of the future winners, but they're still on the watch list. So I'm going to pause here for a second. I'll be back in a second with our charts. Okay. Okay, so we're back, and we're going to start off with our stocks in our portfolio. So the first one is Molina Healthcare. Interesting, we're starting to see quite a few healthcare stocks break out, and we bought another one on Friday, yesterday. So you can see this stock is acting really strong. We've got a nice rising relative strength line. We do have the RS line new high with this little blue dot. It's broken out. This is the weekly chart. And I didn't mention its ticker is MOH. Looks good. Sales have been strong. Earnings are starting to recover a little bit. Looks like annual earnings are also increasing. Good estimates going forward. So it's doing really well. Let's go to the daily chart. It's taking its time. Yeah, we bought this one coming out of this area. Again, a lot of volatility here. So these are none of these setups have been really ideal, but we're trying to make the best of what we're given. So we did have a nice breakout. It just kept going. We've had 1, 2, 3, 4 days up in a row. So it's looking pretty good. We're a little out of the buy range now, so we've taken it off our buy list, our ready list. Nice volume in all this, so it's looking really pretty good. So we're up currently about 4.4%. What we'll probably do is, depending how it's acting, we will, if it gets up to 10% or so, we might take a little bit off, though we don't have a real big position. We've been trying just to creep in the market, but if we have a decent gain, we'll take a little off the table, and then we'll maybe move our stop up, and that way we have basically what's called a free ride, that even if it comes all the way back down, we don't lose anything on the trade. And that's something we're always trying to do is, get rid of the risk. So we can run up enough where we can sell some and then have our stop be covered by what we've sold, then the rest is free. So that's one of our goals we always try to do. But at this point, we're not up enough to move our stop up to break even or anything. That would probably just, more likely we get kicked out and we will be out of the trade. So let's look at the second one, which is Anthem, and that's ANTM ticker. Give me 1 second. Okay, so this one you can see is, again, a lot of volatility going on. It started to make a nice flat base here, and we kind of came down and we came up here, and then you can see that the little contraction was less than the previous one, and then it got tighter here, even though it was a little volatile, and then it broke out, and we actually ended up buying it. Now it closed down slightly on the day, and high volume, but this is also because of the quadruple witching that happened on Friday. So it's looking pretty good. The ERS is coming down a little bit. It's in a good sector. There seem to be other stocks in there, so it's doing nothing wrong. We're just slightly down on the stock. What we had done, we had actually put out an alert too, that when it broke above, I think it was 78.50, which is right above all these highs, we put a buy stop there. And so what that is just means that if the price comes up to that price and goes through it, will be filled. So we put it there just in case during the day it did break out. It's a good way to do it if you can't really watch the market. You can put in a buy stop on a stock for the day only. You don't want to put them as good till cancel, because you might forget about it, and then one day you're filled on the stock that you didn't want anymore. But so you do them for day, and then this one, it actually, we got filled just within 15, 20 minutes later. So it did try to break out, but it didn't quite head any higher. But that's fine. It's looking okay, and we'll continue to watch it. After hours, looks like it's up $3 or so, but that can change. Sometimes we see this and it doesn't really translate into the real world. So those are our two positions, both in the same industry group, healthcare. In fact, I think there's a couple other ones too. HCA Healthcare, which is on our watch list, and a few other ones. So it could be that's a sector that's deciding to make its move. Okay, so let's go ahead and look at our stocks on our ready list. So the first one is Sigma Lithium. Ticker is SGML. I don't remember if we had this. Give me 1 second. Let's see if did we have this on our list before. So look at our portfolio. No, we didn't have this one. I actually bought this in my own portfolio. Sorry, let me go back here so I can continue. I got kicked out. I brought it breaking above this, and it ended up plunging on me. And then it's come roaring back. So this one we're waiting for it to break above. Oh, sorry, this is in the ready list. I'm sorry, I'm in the ready list. Yeah, so we were waiting for it to get above this zone here, a little resistance area, which it did. So it's on the ready list. It's we have a buy zone actually up to the current old pivot price here. And if it can get up there and maybe pause for a little bit, we may actually try to add to the position if we get in it. So we're kind of in the upper end of it. We didn't buy this because we didn't want to buy too many things at once. So we're gonna sit on this. That's one of the few IPOs that's actually doing pretty well, but it is very choppy. But pretty good volume. You can see most of the volume spikes have been on the positive side, so that's a good characteristic. Let's look at the weekly. The weekly, it's volatile, but looks pretty good. It looks like it does want to break out, and we do have the RS blue, new high blue dot, which is always a great sign. It means that the stock's making new highs. The relative strength's making new highs before the stock is making new highs. So that's means it's outperforming the market. So we're going to just continue to watch that. If it calms down, maybe here too, it depends how it is. We don't want to just buy them when they're ripping up like this. So we'll try to see if we can find a place to get in on this one. If not, we'll wait. Actually, I want to go just quickly look at Wave Dancer. We got kicked out of this one really in the last 5 minutes of the day. It was actually acting really pretty well, and then the last 5 minutes it just plunged. I was actually looking at it, and it just came straight down and took us right out. Even came all the way down to the 21-day and then kind of bounced. So closed just below where our stop was. So we got kicked out of this one. It's not as surprising. It's been pretty volatile, but it's got a lot of pretty good action here. A lot of up days in a row, you can see. This could just be an outlier day. We're going to continue to watch it. Ideally, it would just kind of creep its way back up here, right below this 522 point again. Float around there, with the volume kind of coming down like it would do over here, and maybe give us another buy when it breaks out again. But we'll see. It's volatile, so ideally it calms down, but it's got a lot of nice characteristics, And it's also, I did a little research into it. It's a cybersecurity company that's doing work. It's work based on the blockchain, so it's kind of in the right place for a lot of the things that are going on today. So okay, well let's move on. There was a minor loss in that too, but that's how it goes. So let's look at the next one. Is a new one, Costamare, ticker CMRE. This is a Greek shipper. This is looking pretty good. A couple flaws. First, we have a big cup with handle. This was really where a better handle was. The handle was below. Now we have a high handle, which is actually above the previous high. And it's a little sloppy with high volume. And it did break out. It's okay. This has been a better place here, the lower part, but it got very volatile too. So, and then this is what the market's been like. It's a lot of kind of tricky charts and easy to get kicked out of. So we'll see. Maybe this kind of comes down again and forms a better handle. We like to see it sometimes it would maybe come back down and do another shakeout, kick people out, kind of like here, come back up and give us a chance. But it's looking pretty good. So that's on our ready list. Next one is Switch. SWCH is the ticker. Switch, a little more constructive, but this one just kind of came out of nowhere. So we didn't have a chance to get it. But this was a nice little handle here. It kind of drifted down, which you really want to see. And then it broke out and came in. We just didn't catch this one in time to get it on the list. And so, but it's acting pretty well. So this was one. If I forget when we added it. I don't know if I added it on Friday or if it was on Thursday. But anyway, it looks pretty good. It's been a choppy performer though. Let's take a look at the weekly real quickly. Yeah, you can see it's just not been a really easy stock to hold, which is another reason why maybe I saw it and didn't want to add it. But hopefully it calms down a little bit and turns into a nice winner. Next one is Cvs Healthcare, which everyone's familiar with. This one we actually had a buy right here and it broke above, and it's kind of just right above it, so that's why we're in the ready list. This is looking pretty good. It's pretty constructive. So we're just at the bottom. I think the buy zone is 107.10, 107.30. So this is actually buyable here. If the market improves and it doesn't take off too far, we might try to add it. But we'll see. We don't want to have too much exposure, as I've mentioned over and over. Next one's JB Hunt, JBHT. This one just took off and it's kind of pulling back. What we might try to do is do what's called a pullback buy. Hopefully it kind of drifts down high. We like it when if they do make these huge moves to come down and not, really kind of constructively, not too volatile, and then they try to make another move up. So we would try to do the pullback buy if it does something like that. So we're kind of watching, though. It could be purchased here, right in the middle of the buy zone. It looks like there's nothing wrong with that stock. It's acting really well. Next one is United Health, UNH. Again, it's like Anthem and the Molina. It's breaking out. Did kind of the same thing what Anthem did, but it's right in that zone. If you don't have either of those, this one looks viable right here. Next one's Hewlett Packard Hbq. It's one of the few tech stocks that's actually not looking too bad. It was just in one day. Suddenly the picture really improved on Friday. A nice volume too. This means it's the highest volume since it's been in this base. That's a good sign. So we had a buy right above this, so we're just above there. So this could be purchased. A little riskier when you're buying inside of the base because you have this overhead resistance. In other words, people that bought over here, they're hanging on still. Well, they're underwater, and now they're trying to get their money back, which means when you get up to around here, they tend to, a lot more sellers appear because they're just lucky to get their money back and break even. And then the last one is Group One Automotive, ticker GPI. This one has a little bit of a lower handle. This looks pretty good too. Came back and closed at its highs, and it's right at the bottom. This has huge earnings and sales on the annual side. It's really jumped up from, $9 to $11 to $18, now suddenly to $34. So really good sales and earnings across the board. So this is one, it's right at the bottom and is viable. We don't have any long-term performers. A lot of those just got long-term outperformers. most of those were a lot of the tech stocks I mentioned, like Viva and PayPal and Square, and we have Facebook and Microsoft. A lot of them just got really beaten up, especially some of the ones like Shopify really just got beaten up, so they basically were taken off the list. And we haven't been able to find much since, so they'll be back. So here we are on the watch list. We looked at Wavedance already. That was WAVD. This one's Genco Shipping, another shipper. And it's coming back up. We had the little handle here. We've shaken out, coming back up. We don't want it to just rip higher. When the stock was 17 and suddenly you're buying at 22, 15% higher, it's much more risky. So we're watching this. Ideally, it gets closer up here, calms down, and then tries to break out, and that's when we would look to get it. Anthem actually just closed right below its buy zone, so the one we own is just right below it. That's fine. And HCA Healthcare, another healthcare one. This one hasn't been acting as well. In fact, closed poorly on Friday, but still looks pretty good. It's another cup. It looks like it's forming the handle, and that would be a buy above this 269.75. And a couple more. AFG, American Financial Group. This one's kind of biding its time, but it's acting pretty well. And our buy zone is right above this high here. So if it breaks out above this resistance here, ideally we'd clear 141.23 at the same time, but our buy is at 140.75. But a real nice move would clear all that out, even this 141.33, and to close above those would be great. It would probably look like it would make a run for new highs. And then we have one more new one, MP Materials, ticker MP. And this one is a rare earth mining and processing company. And it's looking pretty interesting here. So our buy zone's at 47.30. And we'll see what happens. Again, we'd like to see it calm down and not just come ripping out of here. Just because we were just at under 40 a few days ago, and we don't like to buy something that's 20% higher a few days later. It just, as I mentioned many times, increases the risk. So that's our current list. I'd say we are getting a lot of the setups are B minuses or Bs. At some point we'll get some really nice crisp A setups that we'll be buying, but really the market's just is digesting the previous correction. A lot of stocks are just trading really emotionally in these huge moves, so we're getting a lot of volatility. We'd like to just have the market calm down, set up some nice bases, nice areas to buy, and then we'll be able to get in and in a better environment. But we've improved. That's the best news so far. We're not there yet, so we're going to just proceed with caution. We'll see how our two positions do. If they start making us money and they look like the whole market's gaining traction, we'll probably add a third position and see how it goes from there. But we don't want to, until we have no profits, we don't want to keep adding new positions, because it only takes a few ugly days to send everything in the red, and then we accumulate a bunch of losses. So if nothing else, if we have gains on two and we buy something and then they all go down, at least we're only giving up some of our unrealized gains. And ideally, we end up, if it turns into a bad market, we basically end up flat, which is fine, instead of in the negative column by buying too much too soon. Okay, well, we'll be back next weekend with another weekend video, and good luck trading. Okay, thank you.